So I want to start with an area where you said Africa is the most undercapitalized, high-potential geographic area in the world. Can you expand on that a bit more?
So when you look at the continent of Africa and the venture space there, so the highest we had was of inflows of capitalization in the venture space was in 2022-2023 of about $4 billion, $5 billion. When you compare that to the U.S. with over $200 billion invested in this same year in the venture market, or Europe with about $80 to $100 billion. So you see that, again, while we've moved we've risen fast from the 2016, 2017s, we're still quite highly undercapitalized. But that's where the potential is, right? That's where you have 1 billion people with a median age of under 20. That is the potential, and that is why I say Africa is the most undercapitalized, but with the highest potential for the next couple of years or decades, so to say, when you look at the venture capital industry. That is what I mean by that.
Okay, so how do you fill that gap of undercapitalization? Are you looking at international actors, or are you looking at local actors?
So good question. I think the first thing is realizing that Africa's biggest asset, most strategic asset, is its people. And that's important to make that comment, especially in the light of recent reapproachment by some Western countries, which are focused on minerals, right? Congo and Rwanda and the rest. Our greatest minerals on the continent are our people, our young people, them being well educated, them having the opportunity. At one of our portfolio companies, Andela, we used to say talent is universally distributed, but opportunity is not. And so we see venture capital as a vehicle to do that. So the question then is, where do you find the capital? The first one is we need to utilize and to mobilize more local capital. In our pension funds across the continent, there's a lot of local capital that is tied down. And I must acknowledge Ghana. Recently, Ghana has passed laws that allows a certain percentage of their pension funds to actually play in the venture, space. And we've been seeing this come up. My hope is that other countries on the continent are able to copy and emulate that, because that unlocks local capital. But we also can't play it alone. I think it's important to then attract other pools of capital. Today, it's mostly DFIs, the development institutions, and they're doing a great job. But we need to be able to attract Japanese, Asian capital. We've seen increasingly some interest from the Middle East.
Okay, but in that, one of the things you would presumably be looking to do is look for the long-term investment potentials, but you might have investors that are looking for early exits that are maybe wary of long-term volatility, FX volatility. How do you find that balance between attracting that kind of capital, short-term capital, looking for those exits, and the long-term types of investments that you need for unlocking the true future potential?
Yeah, I think one of the reasons for the low capital availability that we've seen in the past 10 years is definitely exits. But I think it's important to put it within context. Africa is still in its first decade of venture capital history compared to folks who have been at it for 40, 50 years. And it takes a while for you to have exits. That said, there have been a couple of interesting exits like the Paystack acquisition by Stripe. We've seen a couple of market consolidations or acquisitions, right, with Money Point going to Kenya, and we're seeing increasing interest. So I think it's a matter of time. And that's why, as LoftyInc, we've been pretty lucky. We've had quite a number of exits, through secondaries, through acquisitions. But I think there's a deliberate move right now with the bigger players to consolidate, to attract market players, big market players, locally the banks, the telcos, right? But also the Visas, the MasterCards, who are also interested in entering this market.
Okay, now, before we move on to Fintech, which is your preferred space and the area where you have a lot of experience in, I want to understand more like how you explain, how you hedge against the FX volatility that you see. You've mentioned something interesting to me that you might see it more as an advantage than a disadvantage. Could you expand on that?
So when you look at the continent, primarily in North Africa, when you look at places like Egypt, when you look at West Africa like Nigeria, Ghana, every couple of years, 6, 7 years, you usually have a devaluation, right? And so the way we approach the market is that we see this not even as a bug anymore. It's a feature, right, that you then have to factor in. And what that does is it requires investors who understand those ecosystems, who are able to, one, hedge, and by hedging, not just your normal financial hedging, but in diversifying across the continent. So when you're investing in places not just like Nigeria, but also Francophone Africa, where the CFA is pegged to the franc, which offers you a diversification, but also across sectors, right? So you have some sectors that are actually able to earn non-local revenue, and that offers you a strategic edge against devaluation. We also say we back founders who are able to, at times, move faster than the devaluation, right? That in the terms of the products you offer, are able to beat those devaluation. So I think it's beyond our job as investors to solve the devaluation problem. It's really about how do we hedge against it, using the tools that we have, using the understanding and the relationship we have with the regulators, but using the hands-on support to our portfolio companies to help them diversify their revenue streams, to help them also focus on capital efficient, fast-scaling businesses that get to revenue faster, that get to exit faster.
Okay, so you're looking against a single source of revenue. What about, so in the country, you mentioned that Francophone West Africa is an area that excites you. And mentioning specifically fintech and the tech space in general, where do you see the regulatory support coming to make that sector one to watch in the future?
So the beautiful thing about having been one of the founding partners at LoftyInc Capital is that we've always been ahead of the curve. When we started investing in Nigeria in 2012, 2013, building the ecosystems, people were struggling with that idea. When we moved to Egypt in 2016, 17, and started playing a large role, we were ahead of the curve. And for the past couple of years, we've been looking at Francophone Africa. On one hand, you have Francophone West Africa, mostly Senegal, Cote d'Ivoire. You have North Africa, the Morocco, Tunisia, right? And we've seen a reflux of expatriates. We have folks who went out and now going back home. We've seen the currencies being pegged, right, which allows some stability. You've seen fairly stable political economies too. So what then happens is, because you then have the Waymo, right, that allows you to be able to start a wave in Senegal, but quickly expand to Gambia, quickly expand to Cote d'Ivoire. That's really been helpful. You have a go cab that you start in Cote d'Ivoire, but you're able to move to Senegal and move across. So having a single regime, right? Again, there's still issues across, but there's a few issues you have to deal with. But I think Francophone Africa offers a recipe for where you can start in a country and easily, comparably to others, move across. And that excites us at the potential for that, right? And I think that's really, really, for us in our new fund, it's an area to explore and to expand upon.
So you're not concerned about potential acrimony within the ECOWAS, potential changes politically within the ECOWAS that might impact that sort of regional collaboration?
So again, I think the way I look at and what I'm very optimistic about Africa, and people bring up these issues, I point to Europe. Europe is much older, and despite that, there's still trade challenges going on. There's still Brexit happening. There's still all this stuff happening with Ukraine. So those things are features. They would always come with those regional blocks, right? And it's always about how do you improve them, right? And so I don't think we're worried about the challenges around ECOWAS. We think some of them will be solved. We think some of them would linger, but that's not going to stop the ordinary person in the street who needs to eat, who needs to trade, who needs to transact. And that's why we come in with tech, we come in with working with regulators to find how best to solve those problems despite all those regional challenges. And I think increasingly, especially with the new governments in the US, folks on the continent are realizing we need to work together as regional blocks. We need to work together as a continent in solving our own problems, right? Whether it's food, whether it's trade. And you've seen that with the AfCFTA, right? Where there's a huge push. It's been spoken about for years. But there's now a new huge push to ensure that we can increase and improve intra-African trade, because that's really where what we have control over.